We are indebted, we're insolvent, we're 130% debt to GDP. This is stage one of what I believe is a bond market, debt market, liquidity crisis meltdown. As it gets worse, I think you will find gold and silver being looked at by the world differently than it has in a very long time.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Andy Schectman, president and owner of Miles Franklin Limited, joins us today. Prior to starting Miles Franklin back in 1989, Andy became a licensed financial planner specializing in Swiss franc investments and alternative investments. And at Miles Franklin, a company that has eclipsed 9 billion in sales, Andy has developed an operation that maintains trust, collaboration, and ethical behavior. And we're delighted to have Andy join us once again today. It's time to saddle up and silver up for Andy Schectman. Andy, welcome back to SBTV. How are you doing?
Patrick, it is so good to see you again, brother. I am well. I hope you are too. I follow you from afar across the globe, but you're one of the good guys, Patrick. It's always an honor to be back here with you, and thanks very much for having me again.
I appreciate that. You're one of the good guys too. We see you all over YouTube trying to get the important message across. So we appreciate that very much. Andy, I want to start off with the current geopolitical environment. I mean, obviously, it's seems to be getting a bit worse here. Are you seeing people making more purchases for silver and gold, considering this uneasiness?
Yeah, I mean, very much so. A lot of the things that we have talked about in terms of economics have, in many cases, escaped the public. And that's by design. Certainly, the people pulling the strings, the puppet masters, they drop crumbs, and you don't have to be overly astute to see the crumbs and to follow the path. But the thing of it is that you have to employ some effort. The problem with the mainstream is that they, even those that are very well read, have been reading perhaps the wrong stuff. And they learn more and more about less and less till they seem to know everything about nothing in a very pigeonholed manner. They are not seeing the broad truth of what's happening. You have to search it out, listening to people like yourself and to other alternative media sources. So, when you talk about many of the economic things that I speak of on a daily basis, whether it be bank bail ins that were written into law in the Dodd-Frank Act, no one seems to know. Whether it be about gold being reclassified tier one by the BIS, no one seems to know. Whether it talk about the expansion of the BRICS, who the hell are the BRICS? People say, what is that? No one seems to know. The things that mean so much to me in my thought process, no one seems to know. But when you see something as horrific as war, and the protests on either side, it's catching people's attention. And I think it's also, there's a very strong anti American tone to this anti Western tone that if you're not a little bit concerned and you're not catching this drift, this isn't the crumbs that are laid at our feet by the deep state where you have to dig. This is right in front of you. Now the question is what we're being told completely true? Is there deception employed? Is this being done purposely? Is there a bigger picture or agenda here? These are the questions that we try to dig out. But yes, there is a sense of uneasiness if you ever watch Star Wars, there's a disturbance in the Force. Well, that's what it feels like. And even though people may not be able to articulate exactly what it is that's freaking them out, I think it's fairly evident to see that people are concerned and they understand that there's something going on and that it has bigger implications. So we have seen an uptick, and it's interesting too, Patrick, because the majority of all the sales we've done over the last 3, 4 years have been directly attributed to silver. The sales that we've seen since the war has escalated in the Middle East. And it didn't seem to catch people's attention so much in the Ukraine as it should have. I mean, atrocities of war are horrible, but for whatever reason, the polarizing effect of Israel and Palestinians is such that there are people waking up, and I think that I think that we've seen a much more uh, concerted drive towards gold over the last couple of weeks because what we're seeing are larger purchases. People saying, "Geez, this is something that is very concerning." And a lot of these people that are buying haven't bought before, and so they're not understanding the value found in silver. They're running to gold because they're afraid of the big geopolitical implications. So the answer is yes, we have seen an uptick, most of it in gold, whereas 98% of the business we've done in 4 years has been in silver. And that to me is a little glimpse into the expansion of the mainstream, who are just catching pieces of the narrative. They don't understand the tremendous value in the story behind silver. They simply see that there is a disturbance in the force, and, well, I better do something that is considered historically safe. First place to go to would be gold. So, yeah, I think this is the beginning stages of what is going to be an expansion into the mainstream's collective awareness.
Yeah, I agree with what you're seeing there. We're seeing the same thing here in Asia, including that disturbance in the force. And I mean, when you look at the bond yields and the inverted yield curve, and how that may mean that they're even going to look at raising the long end of the yield curve. I mean, shouldn't this be spooking investors when this safe haven asset is becoming extremely volatile?
Yeah, it should be. Well, first of all, first and foremost, when you talk about the yield curve, which has been so massively inverted, and the uninverting of the yield curve is typically when we see this recession. But in fact, if you go back over the last 50 years, I don't think there's been a time ever where the yield curve was inverted, especially the way that it has been over the last year or two, that hadn't been the precursor to a recession. The difference is, and to your point, that most of the time we would see that it would be the Fed coming in and lowering the front end of the bond market to stimulate growth. Well, we'll drop short-term interest rates, and hopefully people will take loans and speculate, et cetera. This time, it's not been that. In fact, the Fed has been raising the front end of the short end of the curve, and what we have been seeing is the back end rising, not at the behest of the Fed, but at the market directing yields higher. Whether it be the fact that, I mean, who the hell wants to buy a 10-year Treasury paying less than what a 2-year Treasury is? So yields have to go up to chase that. But at the same time, um, you have a situation where, as with the banks as an example, as depositors are coming in to redeem their deposits, as people in bank accounts say, I want out of the bank. These banks are undercapitalized. They have to sell their 10-year treasuries, which in and of itself lifts yields. But the bottom line is, you have the banks in trouble. You have the governments, China, Japan, Saudi Arabia, they're all dumping 10-year treasuries. And as they're selling their treasuries, which have been the worst performing asset period over the last several years. In fact, go back to 2020, this will be the worst bond market disaster in history in terms of a bear market. And so as these sovereign nations and as these banks unload their toxic 10-year treasuries and longer maturities, the back end is rising on its own. And so you have a situation that's doubly troubling as far as I'm concerned. A bond market that I think the Fed is beginning to realize that the market is much bigger, if you will, than the central bank. The market should control the rates, not the Fed. The market should be controlled by, or the rate should be controlled by the natural forces of the market, not by the Federal Reserve. And we're seeing a period of time, Patrick, where foreigners are not buying the treasuries anywhere near the amount that they used to. In fact, the Federal Reserve is probably the biggest buyer of the Treasury market. And I think that what we are witnessing is the realization that, look, in a historical context, treasuries and government debt, it's a relatively new ideology historically that government debt represents savings. I think they're beginning to realize that that may not be the best pathway, and I think we're seeing a move back to gold as being the preeminent form of savings. And my justification for saying that, it's not that I'm a gold dealer, it's the fact that you have the worst 10-year treasury performance in history last year, coupled with the greatest amount of gold acquisition in history by the central banks. Do you think there's any coincidence in this, that as the central banks are buying gold, they're shedding treasuries? And I don't. And I think that this is a trend that will continue. And we are a country that has signaled more or less that we will choose inflation over austerity. We will choose to not raise yields high enough to break everything apart, and we will inflate our way out of it. But I have said for a very long time that the market will has other plans for the treasury market. It will be the dumping of dollars globally that will push rates markedly higher. And then the US has a villain to point to, and it's that those bastards at Xi Jinping and OPEC and Putin, they're the ones who did this to us. And we can get into how I think that happens if you'd like. But the bottom line is that this is a very tenuous situation, and I think the bond market will be something that will be forsaken for quite some time, as the illusion of safety in a treasury market that has, in my opinion, lost trust, has lost faith in a country that is 150 trillion in debt. Forget about the 32 trillion. How about the Medicare and the Medicaid, the Social Security, the government military pensions that are 130 trillion? We are indebted. We're borrowing money just to pay the interest on the money we borrowed last. We're insolvent. We're 130% debt to GDP. And you know what, Patrick? Anytime a country in history has crossed that Rubicon, it's never come back without defaulting, whether it be outright default or hyperinflation, which is a form of default. So this is stage one of what I believe is a bond market, debt market, liquidity crisis meltdown. And as it gets worse, which I believe it will ultimately, I think you will find gold and silver being looked at by the world differently than it has in a very long time. And, they say the more things change, the more they stay the same, or history doesn't completely repeat itself, but it rhymes very often. And, for most of human history, gold and silver have been considered wealth. There's been this period of time in the last 70, 80 years where that was ignored and replaced with debt accumulation instead as a form of savings. I think we are beginning to go back full circle to at least the very, very sophisticated investors, the central banks, who not only have bought more than at any time in history over the last 18 months. Their numbers this year are they bought over 800 tons this year. They're up 18 or 20% year over year. They're continuing this trend. So yeah, I think this is a trend that will continue, and a bond market that anyone who's holding long-term treasuries, I think, needs to really take a hard look at their portfolio. It's something right now that I think could and will prove to be disastrous for those who are still hanging on, like the banks.
If you're enjoying this interview with Andy Schectman and I, please consider subscribing to our YouTube channel. And be sure to send me an email, patrick@silverbullion.com.sg, with email me in the subject heading to better stay in touch, to let you know when new content is posted, new products and new promos are up, along with original articles and insights, all to help you to truly secure your wealth. Right, a lot of great points there. I think even for Singapore, I think we've bought over 70 tons already. I believe it was of gold this year so far. Please continue about when you mentioned oil and I think it was Putin and some other things.
Yeah, so look, I mean, I've been talking with you now since late 2019, early 2020. I think we started doing a few shows, and back then I was one of the only, if not the only voice out there talking about BRICS and the de-dollarization. And my wife would say to me, "You keep saying the same thing, Andy." And I'm like, "Well, but no one's talking about it." And to me, I don't see how this isn't the most important thing to talk about. So I've stuck with it. And in over 3 years, I've done 1,240 videos on this topic. And it's something that I believe in my soul is being orchestrated, Patrick. And I can't even believe I say that. But I do. And when I started down this path, that wasn't the path I was on. I started down this path in 20 really in 2017 when the German Bundesbank repatriated their gold from the New York Fed, which was very unusual. And the demands that they said, look, we've been trying to do this for 2 years, send us back our damn gold. And then you saw very quickly after that the same things being said by the Dutch National Bank, the Bank of Austria, the Bank of Poland, Hungary, Turkey, Czech National Bank, on and on and on. All of these Eastern European banks said, give us back our gold from the New York Fed and the Bank of England. Then I stumbled across the Belt Road Initiative, and that's when things really started to change. Well, the Belt Road Initiative, obviously being the largest infrastructure project in human history, the West isn't part of it. It is right now 75% of human population, 50% of global GDP. Every OPEC country on the planet is on it. And it started to kind of make me look at things a little bit differently at that point. And then we start to move towards things that really started to catalyze my thoughts on this. And with the pullout of Afghanistan, the way that we did the day after that, Russia and Saudi Arabia strike a joint military cooperation agreement. And it was at that point I said the world has changed. At that point, the dollar has lost its reserve status, or it's the beginning of it, because it is the protection of the Saudi kingdom by the United States and their willingness to value oil globally in dollars that gives the dollar its hegemony, largely, along with the full faith and credit of the U.S. We'll get to that in a moment. But I would say, well, isn't it the United States that's protecting Saudi Arabia that gives us the petro status and OPEC's willingness to sell dollars or oil in dollars? And when that happened, it really was crystallized to me that this is the beginning of the end for the dollar. And then you move forward to the weaponizing of the dollar. And it's not the prerogative of the world reserve currency to say, well, you can use it and you can't. We are the country that 20 years ago invaded Iraq. And most people would tell you that it was done illegally, at least over there. They will tell you it was done illegally because we were looking for weapons of mass destruction. And oh, we're sorry, we didn't find any. We destroyed your country. We toppled the regime, put in a new regime. And you talk about the hypocrisy of this. This is why the world doesn't like the United States, at least that side of the world. 20 years ago, we topple the regime, we destroy their country, and we're still occupying it. In 2022, Iraq made $90 billion in oil revenue. All of their oil revenue has to go to the New York Fed. Think about this. They can't even decide what to do with their revenue. The Fed holds it. And they said to the Fed, can we please have $1 billion? And they said, no. But it's our money. No, sorry. So they're saying, you know what, kiss my ass. And the Iraqis have made trading in dollars illegal. If you own a business, they'll throw you in jail for it. They'll take your business. As of January 1st, 2024, um, the physical dollars, the $100 bills, gone. They will all be gone out of Iraq. None of the banks will hold them. They have already told the folks at BRICS that if they were invited, they would join. This is the hypocrisy and the coercion that is the rallying cry when you talk about weaponizing the world reserve currency from a country that sanctions right now about a third of the Iraqi banks, sanctions them after liberating them because they were trading in dollars with Iran to buy natural gas to cool their homes in the midst of a 130-degree summer in the middle of the desert. Well, sanction them. Let's do that. So the hypocrisy of the West, where we can come in and destroy a country under looking for weapons of mass destruction, not find them, control their natural resource proceeds, and sanction their banks, have a presence there. Imagine this was the United States or where you are in Singapore. This would not go over very well. And this is the rallying cry that's bringing everyone to the table. So you weaponize the dollar. You make everyone say, "Geez, are we next?" China's saying that. Saudi Arabia is saying that. Maybe even Japan is saying that. I don't know. I mean, they're selling treasuries too. But the bottom line is, a good portion of the world is saying, no, we got to find another alternative. So we weaponize the dollar. But even more stupid than that, we sign an executive order saying, hey, we're going green. We don't need you anymore, Saudi Arabia. I know it's been great, but we're going green. By 2050, we're going to be 85% green. By 2030, 50%, right? Of course, that hasn't been thought out very well, as the majority of the rare earth metals are in Indonesia and in the Eurasian continent. In fact, President of Indonesia, Nadudu, or something along those lines, you pronounce it, he's calling for an OPEC-style cartel of the rare earth metal market. So, anyways, we weaponize the dollar. We tell Saudi Arabia that we're going green. Okay. And what's interesting about this is that if you look at the chief economic advisor of the United States government, it's a man named Jared Bernstein. Jared has a degree in music and a master's degree in social work. And there's your lead economic advisor of the United States government who advocates for the immediate removal of the world reserve status, that it is an exorbitant privilege we can no longer afford, that it creates distortions and anomalies in asset prices and in trade imbalances in markets. And he wrote a report called Dethrone King Dollar that was picked up by the New York Times. When Trump slapped tariffs on China, he said, great, hopefully we'll lose our reserve status. Picked up in the Washington Post. So your lead economic advisor wants to lose the world reserve status. How do you do that? Well, let's start by weaponizing the dollar and telling Saudi Arabia that we are going green. Now, it gets deeper than that, of course. Um, and I think when you talk about what makes the dollar world reserve, well, there are three things. One, the petrodollar. Well, we've already covered that. You have all of these nations that are already trading with Saudi Arabia in local currencies. That's part of the BRICS, what they said they would do. And after the last meeting here in August, we're going to trade with local currencies, come back to the drawing board. They said this to the finance ministers of the 11 BRICS countries, and they said, let's come back next year, the meeting in Russia, and talk about a unified settlement currency pegged to commodities. That's coming, probably to gold, because why? Gold is what? The only other tier one reserve asset, according to the Bank of International Settlements in 2019, which really opened my eyes, of course. And, you know, so you're seeing this happen little by little by little. And but I think it gets a whole lot deeper than that, because now it gets to a point where you have a situation where there's the faith and the credit side of things too. You get the full faith and credit of the United States, not just the petro reserve status. And the 2022 balance sheet came out and said we're 160 trillion in debt, or 155 trillion in debt. Medicare, Medicaid, Social Security, government military pensions, on top of a $33 trillion debt. We raised the debt ceiling a few months ago, and we've already added 2 trillion to it. It took us over 210 years to print the first 2 trillion. We did it in a few months. It's accelerating at a massive, rapid pace. And well, this is a very big problem. So when we talk about debt burden or the credit, we have crossed the 130 debt to GDP ratio. We're insolvent. We're broke. So the petrodollar, throw it out the window. The credit, throw it out the window. How about the faith? Now you're looking at us from Singapore. You are originally from the United States. But you have maybe a different perspective on this now, because you see it through the eyes of a media that is not Western biased. I would argue the world sees the United States as a country that's lost its bearings, a country that used to be united. That's what made us strong and able to face adversity together. We believed in the nuclear family, largely believed in God, largely respected authority, and were united, where you could speak to someone about topics that you didn't agree upon, but yet do it in a cordial manner. where you weren't defined by the person you voted for in the last election. And I think that the fact that we are broke, insolvent, we are telling the Saudis, hey, we don't need you anymore. We're going green. We've signed an executive order to do so. There's the hegemony right there. We've told the rest of the world, if you're not on our side, watch out. We are a country in terms of its faith. We're lost. We have cancel culture. If you don't listen to what I have to say, you don't kiss my ass if you don't believe what I say. Your opinion means nothing. Well, there's your cancel culture. You don't like what I'm saying? We're going to take you off YouTube. You say the wrong word, we're going to take you off YouTube. And or transgenderism or um, censorship or any of these things that are dividing this country. I come from a time and a place where you respected one another, where differences, I don't care what drugs you do or who you sleep with, you can still be my friend, just don't push it upon me. And now that's all changed. And we come from a place right now where there is divisiveness, red, blue, black, white, rich, poor, vaccine, no vaccine, and there is visceral hatred. There is lawlessness in our cities. We are not a united country anymore. So put it all together. The petrodollar's dead, the faith is dead, and the credit, we're insolvent and we're broke. So why would they do this? Why would they do this? And by the way, the number two economic advisor to the United States government is a lady named Lael Brainerd. And Lael is a modern monetary theorist whose whole mantra is to get rid of the banking system and to issue a central bank digital currency directly from the Fed. And if you look at what they're doing by siphoning all the money out of the regional and the commercial banks via the regional banks are all going to the too big to fail banks, supposedly, into their money market accounts, which give you daily liquidity at over 5%, whereas the regional banks, they're all upside down with their balance sheets. We've been told they'll be bailed in, which no one seems to know what the hell that is. Catch them all off guard on that one because they will be bailed in. The next banks will be bailed in where you are an unsecured general creditor of the bank. And, so that money is going to the too big to fail banks in the money market account. The best rate you're getting in a 1 year CD in a regional bank is 4.5%. And you're locked in for a year. How about go to a too big to fail bank like Citibank and use a money market account, get paid 5.33% with daily liquidity because the Federal Reserve is allowing that money to be parked in the overnight reverse repo market. But what's happening to all the money in the repo market? It's leaving, it's being siphoned out and going directly to the Treasury, treasurydirect.gov, because their rates are higher than the repo market backed by the government. So the money's leaving the repo market. What I'm basically saying is all the money is being drained out of the banking system, all of it, whether it be the regional or the commercial. And it's putting it on a very, very, very slippery slope. And this is exactly what she wants. When the next bank fails and is bailed in, it will create a crisis that no one can even imagine. The panic, because people don't understand you are an unsecured general creditor of the bank according to the Dodd-Frank Act. So let's put this all together. Um, you have a situation where I think they realize we've gone too far down the road. We've crossed that Rubicon. We need to reset the system. When Klaus Schwab said you'll own nothing and be happy, I thought he was an idiot, but I don't anymore. And it's eerily similar to what Thomas Jefferson said 300 years ago. He said if we allow a central bank to control the money first by inflation, well, we've seen that. More money created in the last 4 years than in the history of the United States before it. And you talk about 80% of every dollar in circulation created over the last few years. All of that money chasing assets that have been massively uh, artificially boosted due to interest rates that were at zero for a decade. So you have this hugely um, unnatural environment of suppressed interest rates and easy money that have created all of these distortions in the banking system. And this will not end well because I think what you're going to see this time around is a situation where they realize that we're so far down the road that we have to reset the system, and everyone who has these massively inflated overvalued assets are going to have a religious experience when this thing breaks. And here's how it happens. So we tell Saudi Arabia, we're going green. We don't need you anymore. We weaponize the dollar. We freak everyone else out around the world. So they find alternatives, a la the 27 countries who have applied to BRICS and another 22 who have informally expressed interest on top of the 11. The Belt Road Initiative, the Shanghai Cooperation Organization, the BRICS, and the Eurasian Economic Union are 85% of human population that are all coalescing, finding safety in numbers against the Western hegemony. And we are setting the table for this, and that's exactly what Jared Bernstein wants. So something happens, and the Saudis come out and they say, "Look," and this regional war will only exacerbate it. They say, "Look, we're not on the same side of the page ideologically. We appreciate the fact that you've protected us. That was the deal we struck in '74. You protect us. We will denominate oil globally in dollars, and we will put our money back into treasuries and recycle those dollars." Well, look, that hasn't gone too well since 2020. Our treasuries are worth 50 cents on the dollar. You're choosing inflation over austerity. The dollars that we are getting are losing value. You've weaponized the dollar. You're making us very nervous. Let's just part ways amicably. You said you're going green. You signed an executive order. So you know what? We're going to join the BRICS, and this is what we've done. We've joined the BRICS. We've joined the Belt Road Initiative. As of all of our OPEC brothers and sisters, we have joined the Shanghai Cooperation Organization, which is not only the largest regional financial group in the world, but the largest regional military group in the world. We've also joined the BRICS New Development Bank, and we told the folks at Davos that we are open to taking other currencies for oil. So thank you for 50 years of protection. It's been a nice run. We're going a different direction right now. We're not going to take dollars anymore for oil. Bang, like that fast. Every country on the planet dumps dollars. And when those dollars come home and hit our shore, the byproduct is hyperinflation. Now, what is the natural reaction to hyperinflation? It is the market pushing interest rates up high enough to compensate for that inflation, because you cannot have 5% interest rates and 30% inflation, or your currency is toilet paper. So they have, in my opinion, incentivized this reaction to the world because we have 5 trillion in assets backing 150 trillion in debt. The largest asset of this country is student debt, representing over 40% of the government's assets. It's a joke. Take student debt out of the equation. We have 3.5 trillion backing 55 trillion in debt. We are insolvent. We are broke. We are a banana republic. The faith and credit, well, the credit's gone. The petrodollar's gone. And the faith, what faith? And I don't care how you feel about former President Trump or President Biden. I don't think it's easy for anyone to say that the law has been applied equally to both. So even the Lady Liberty with the blindfold holding the scales of justice, I don't think people think that we are even employing justice the same way we once were. They are looking at this country as a country that's lost its way in terms of the way that it deals with family, with religion, with faith, with respecting authority, indebtedness, divisiveness. Is this all by design? Because here's what happens. They say, look, thank you for the memories. We're going a different direction. Everyone dumps dollars. Interest rates spike to the moon and all assets collapse. Stocks, bonds, and real estate, and the dollar. There's your Klaus Schwab moment. Because remember, Thomas Jefferson said, first by inflation. Well, they suppress interest rates. Prices go to the moon in that environment. They throw money on it. But then by deflation, well, what's happening to the repo market? It's draining. What's happening to the banking system? It's draining, chasing yield. What is happening to the money supply as a result? It's falling off a cliff. Then by deflation, rates rising, companies going out of business, can't maintain their debt. That's deflation. First by inflation, then by deflation, you'll end up renting the land that your forefathers conquered. Sounds eerily similar to what Klaus Schwab said. You'll own nothing and rent. You'll be happy. So you have this massive event where asset prices are spiked to the moon through all of these years of easy money and low interest rates. OPEC dumps the dollar. Every one of them are on the Belt Road. They are coalescing and finding safety in numbers against the West. Especially the conflict now in the Middle East is not aligning well with the countries that, look, who just signed up with them, with the BRICS. United Arab Emirates, Iran, Saudi Arabia. You have 80% of the oil. You throw Russia in there of OPEC oil that is controlled now by the BRICS. We're going green. They're not. 85% of the world's not. So they say, hey, we're done. Dollars come flooding home as every country on the planet has had to stockpile them to buy oil for 50 years. It's a synthetic demand. Don't need to own them anymore. Better sell them fast before they get crushed. Everyone dumps, rates skyrocket. And what have they just done? Two things. People say, well, what are their choices? They can inflate or default. Sure. How about option number three? Find a villain. Who's the villain? Those bastards, Putin and Xi Jinping and OPEC, they did it to us. How could they do this to us? And now you have a rallying cry. But what does Lael Brainerd want? So remember, in that environment, everything collapses. The banks are on edge. They're massively over leveraged and undercapitalized. The insurance companies in the same boat. Everyone is happy that their asset prices are so high, but they're illusionary because of the money and the interest rates create an environment where these prices are not real. And so when interest rates spike and these asset prices have to adjust to meet a much, much higher interest rate environment, they collapse. You now have a villain to point to. And that villain is option three. You default because you collapse, but it was done by them and their actions, and they did this to us. And the interesting thing about it is, have no fear, Lael Brainerd is here. And Lael Brainerd is a modern monetary theorist, as I mentioned. She spent time at the Treasury and then worked at the Fed. And when she was at the Fed, she worked with MIT in development of the new central bank digital currency. So the Bank of International Settlements have done two very major things in my career. The first one is that they reclassified gold tier one. And the second thing they did, the only other tier one asset, by the way, and the second thing that they did was they said every country on the planet must have an operational CBDC by 2025. And the people who watch your show are going to say, I don't want to take that damn thing. They're the people who understand what's happening. But what happened in that instant where everything collapsed? Everything, stocks, bonds, real estate, banks, everything collapsed because interest rates go to 30% as the world dumps dollars like that. Have no fear. Lael Brainerd is here. Lael has been developing with MIT the central bank digital currency, and she ran point for FedNow. FedNow came out 2 months ago. And for those of you who don't know what it is the Federal Reserve's version of Venmo or Zelle. It is instant settlement in payments. It is the appetizer to the central bank digital currency main course, which is coming in 2025. It will take the place of checks and wires immediately. Where if someone were in Singapore right now who had access to a FedNow account and said, "Look, I want to buy $5 million worth of gold from you, Andy, but Patrick, you're in Singapore. How can we do that right now? How can I lock that in on your word?" Well, I just FedNowed you. It's in your account, and that's basically what it is. It is, I think, getting people comfortable with the concept of a central bank digital currency, but most people don't want to take it. A lot of people I talk to don't want to take it because of its programmability and the ability to do things to minimize your privacy and curtail what you can and can't do. So, how do you get people to take it? Well, you create an event that you're not to blame for. Forget about the fact that the Federal Reserve's brain dead monetary policy and the government's fiscal policy have destroyed our currency forever. The indebtedness, look, 1 trillion seconds ago, Patrick, was 31,688 years ago. And we have 150 trillion in debt. How the F do you ever pay that off? You don't. So instead, you default, but you find a villain, and everyone loses everything at once. There's your great reset moment, but have no fear. Lael Brainerd and the central bank digital currencies here. I'll tell you what, Patrick, I know you've lost everything. Your bank account's zero. Your IRA is zero. Your real estate's collapsed, but here's what we're going to do. Just sign on the dotted line and take our new central bank digital currency, because after all, I am a modern monetary theorist, that being Lael Brainerd. We'll just make you whole. Take the CBDC and you will be made whole. This is how you create an event that levels the playing field, that makes everyone not only willing, but need to take the central bank digital currency. This is how you reset a system that you are so far indebted that you will never pay it back. And instead, you create a villain to do this, to rally behind. And just like everyone across the globe believed that it was safe to take a shot that had no research on a virus that just came out of nowhere, and all of a sudden we have the magic bullet. Everyone believed the narrative surrounding the whole thing, and now we find out a lot of it wasn't true. Well, the same thing will happen here. The world will believe it was the villainous act of OPEC and Putin and Xi Jinping that destroyed the American economy. And well, there's your rallying cry. There's your acceptance of the CBDC. There's your leveling of the playing field. There's your Klaus Schwab moment. Now, is this going to happen? Could it happen? Don't know, but I will tell you what. You see rates continue to rise, you will see a banking system implode. And all of these banks are massively over leveraged and undercapitalized with assets on their balance sheet that are worth pennies on the dollar. And when they're forced to sell, which they will, those assets, when people say, give me back my money, when the first bank that fails in this country, the next one that fails that is bailed in. See, this is why there was such outrage with Silicon Valley Bank, and Janet Yellen bailed them out. Well, we thought it was too systemic. It would blow up the whole system. And the Oklahoma senator said, well, Madam Secretary, this is illegal. The Dodd-Frank Act said you can't do it. Yeah, well, it was an uber majority vote between the Federal Reserve or the FOMC, myself, the president, and the FDIC. But the next bank that fails, that won't be the case. And he said, so, yeah, right. So if a bank fails in Oklahoma, you're not going to bail them out from my constituents? No, sir. Not unless it carries that same uber majority concern. No one knows what a bail-in is. I talk to people every day. Do you know what a bail-in is? No. Do you know what's written into law in the Dodd-Frank Act? What's the Dodd-Frank Act? What a bail-in is, you're an unsecured general creditor, and anything over a $250,000 FDIC limit is gone, goes to bail in the bank. Wait till that happens. And the next bank that fails, all of these banks that have been downgraded by S&P and Moody's, wait till that happens. We added 14,000 clients in 45 days when Silicon Valley Bank failed and they were bailed out. Wait till the next one fails and is bailed in. And that's just under normal circumstances. But here's the beginning of a rising interest rate cycle where everyone who is freaked out about their money in the bank goes to yank it, and all of these banks choking on 10-year treasuries will have to sell them and will push rates up higher. And all of these things are spinning out of control in a doom loop, further incentivizing the Saudis and OPEC to move away from the dollar, let alone what's happening in the Middle East. You can see that there are a million reasons how this could happen. And when it does, when the Saudis say, look, you guys are going green anyway, we're being protected by two of the three largest nuclear arsenals on the planet, and we're not going green, all of us, 85% of the world over here. Thanks again, guys. It's over. And that's how fast and how fragile the whole system is, and no one gets it. And I wish the message I had was more cheery and rosy. And I say the same thing on every interview I do and have, and I've been right. And that's what scares me more than anything. Because when I go back to 2019 and look at my videos out there, I've been saying this for going on 4 years now. And everything that I have talked about has happened. And that's the scariest part of all. I've never seen things this clearly. They've never turned out the way that I thought. And this is going faster and faster and faster than I would have ever anticipated. So, Patrick, I think that this is a time when people need to look at precious metals not as an investment, but as wealth. And you throw on top of it the fact that the BIS reclassified gold as the only other tier one. Do you think there's any coincidence that the most well-funded and, more importantly, well-informed traders on the planet, the central banks, have bought more gold than at any time ever? And right now, let me just see the exact number here. Put my glasses on. The exact number is that they've added, bear with me here, I want to say they've added another 18 tons, but let me just make sure. I should have had that off the top of my head, but my head feels like a Nerf ball sometimes. I guess it really doesn't matter. I don't have the exact number, but the bottom line is that they're, oh, here it is. So far this year, central banks have bought about 25% of worldwide gold production. Central banks have bought 800 tons in the first 9 months of the year, up 14% year on year, according to the World Gold Council. Well, they bought more gold than ever over the last 18 months, and now they're even going higher. So how does it happen? How does the Great Reset happen? It happens because the world dumps the dollar as being the sole settlement currency for oil. And it's not going to happen immediately until it does happen immediately. I call it logarithmic decay. Little by little by little by little by little by little, then bang all at once, going over the waterfall. The pitch starts to change little by little. But look around us. The little by little are all of these countries striking deals outside the dollar. All of them, all the BRICS nations, all of these countries are moving away from the dollar little by little by little. What is the event that makes it happen all at once? I'll tell you one thing: if you are not prepared for that, you're done. If you're fully invested in traditional assets, you're done. What's an easier way of saying that? If you're not a contrarian right now, you'll be a victim. And I believe that in my soul. And you don't buy gold and silver to get wealthy, it is wealth. And it has been for 5,000 years through two world wars, German hyperinflation, and the Great Depression, and it hasn't changed. Look at the most well-informed traders on the globe. Don't listen to what they're saying. Look at what they're doing.
Absolutely, amen.
Sorry to ramble so much, but I'm passionate about this, Patrick. I really am.
It's okay because everything that you said, I mean, I think I'll just say probably every person who has ever gone into gold or silver eventually came down this path, the path that you were laying out. So I think it's very very valid information. It's information that we get bits and pieces from, and we're all trying to see it just as clearly as you do. So I really do appreciate that. And just to add one story, we mentioned how what does the outside world think about the U.S. Generally, I can say two places. One, they are happy to see it fall. They are happy to see what's happening.
I
Two,
bet.
the example I have is of a older auntie. She's probably in her mid 70s, 80s. I believe her name was Miss Madam Lowe. She asked me, and she asked me in tears, "What's happening with the U.S.?" She doesn't understand. It was a country. She's not even a U.S. citizen. She's from Singapore. It was a country that she spent time in, a country that she loved, and she can't understand what's happening. And it's hard to explain to her that what's happening there is going to be something that could really spill over into a lot of the world. Uh, so, like he's saying, really things like gold and silver right now is it's that investment, it's that insurance that I think people really need to take a good hard look at. Um, but that's a bit of the sentiment right now. There are people who are really sad to see what's happening to the U.S.
Yeah, I'm one of them. I'm one of them, Patrick. It's very sad. It's a very scary and sad time.
Yeah, it is. It is. But Andy, before we head out, can you tell us how people can follow you on social media or where they can follow you on social media and of course about Miles Franklin and the services you provide?
Yeah, on social media, I look for a long time. We had our own YouTube channel. It's still there. It's dormant. I just bought the equipment to do it myself from now on. I'm going to start doing some shows here very, very soon, and would love to have you on. And I'll put you in the hot seat, and I'm going to ask you the questions. I've done, as I said, almost 1,300 videos over 4 years that have been turned into, I don't know, 10,000 because there are YouTubers out there that cut pieces of it and monetize it, put it in their own words into music and whatever. I don't know who they are. I'm flattered by it, but there's so many YouTube videos out there. I do today. I have 6 interviews. You're number one. I got several more coming up the rest of the day. This is kind of what I do every single day. So finding me out there is certainly not hard. Our website is milesfranklin.com. And those that would like to ask questions or receive a price list that's a lot more competitive than the one we put on our website, info@milesfranklin.com. And we've been doing this now for 34 years. In February will be 34 years. So we've been doing it for a long time. We have strong fingertips. We've been able to hang on. It's an honor to be here with you, Patrick. You're, like I said at the beginning, you're one of the good guys in this industry, and I think we should do this more often. So thanks for having me. Thanks for the insightful questions and for letting me loose. I appreciate it very much.
Yeah, no, I appreciate your time. I appreciate your kind words as well. And I'm thinking we're going to have to do something Colorado Buffalo style where we're going to have to make a t shirt with your image and it says, I ain't too hard to find.
Yeah, I am not.
Andy, again, I want to thank you for your time. And yes, I do hope we can do this again soon.
Well, let's do that, Patrick. You stay well,
That was
buddy.
the Andy
Hope to talk
Schectman from
soon.
Miles Franklin sharing his views on the economy and precious metals. To see more about his views, go to Twitter at Miles Franklin Co. or go to Andy's website, milesfranklin.com. If you like this video, please do subscribe, share, and give us a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.